Hello, Tiernaut, and welcome to this daily market commentary for Tuesday, the 15th of October, 2019. And Tuesday would start out with the same old themes on the table. Brexit negotiations continue, with one Irish official stating that negotiating teams are making progress, but it's slow. The same official also mentioned that talks could move beyond this week's summit into next week. This was initially enough to take sterling against the dollar up to a high of 1.2697. But some comments from Bank of England Governor Mark Carney that rates could be cut to just above zero, brought sterling back down to around 126.5 during the European session. Every single comment you get right now on the Brexit front is going to garner a reaction, and today would be no different. Euro dollar spent much of the European session heading lower, broke 110 down to a low 110.92, sorry, 109.92, and partially due to dollar strength, partially due to German officials cutting their GDP estimates for 2020 from 1.5% to 1%. The USD sees the beginning of a new earnings season, and positive results from both United Healthcare and JP Morgan give US equity futures a boost as Wall Street opens. The Dow Jones is up by 150 points, and dollar yen is back up towards 108.5. Euro is sitting just below 110, and cable is trading around 126.5. Aussie and Kiwi, interestingly, have both weakened overnight. More a case of dollar strength and negative risk sentiment. They begin the US day at 0.6745 and 0.6260 respectively. And then comes a big headline. EU and UK negotiators closing in on a draft Brexit deal, and we get a very quick reaction. Euro jumps up to 110.30 and sterling all the way up to 128 the figure. The Dow Jones enjoys it as well. Not that a positive Brexit solution has that much effect on the US, but the Dow is now up 250 points by midday US time. The Brexit draft is, of course, dependent on getting approval from the Democratic Unionist Party, which is a Northern Irish political party. Next coming out, we have a comment from a senior EU diplomat that reports that an imminent Brexit deal is way too premature. Sterling comes back down, quick 80 points, down to 127.20. And then we get a comment from the aforementioned DUP that more work needs to be done. Not really a negative. I think the market was scared that they might get something definitively negative from the DUP, which they didn't get, and sterling's back up towards 127.80. I hope you're kind of keeping up with this, but if you look at the sterling chart of the day, it kind of has the scrawlings. It looks like the scrawlings of a 5-year-old, but it is generally positive. And as we head towards the end of the day, euro consolidates against the dollar at 110.35, and dollar yen continues to probe the highs of the day, just shy of 108.90. That despite equities being off their best levels by the close. The Dow ended the day up 237 points, which was about just shy of 100 points off its best levels. And we also had gold sitting around 1481, probably $3 off the lows of the day. So a day of positives from both Brexit and the beginning of the US earnings season. The question is, can it be sustained? The next couple of days, I think, will be very, very interesting. And on the sterling note, not a cross I mention too often, but when you have some positives in the UK and a generally positive risk environment, sterling yen is most definitely a pair to look at. And this week, obviously, well, at least the beginning of this week, we have the double whammy of positive Brexit comments and developments, and also a fairly positive risk environment from the beginning of some positive earnings out of the US today, and then obviously the overtone from the trade talks at the weekend. So you look here, I've got a daily chart up. I just wanted to bring up a bit of a bigger picture, but you can see here in the past week, we've jumped from 130.5 up to right where we are now, 139.30, I think was high on the day. So you know, you got a 850 point rally there, 880 point rally at its extreme. Not a bad move for a week, eh? So definitely want to keep an eye on. You can see we did form this short-term double bottom around 126.60 here, which is out. Technically, it's obviously was a good sign. And now we've had this significant rally today. As you can see, I've got this line coming down here. This is a general sort of downtrend line which stretches all the way back to early 2018, and we still have a fair way to go before we break that. Probably need to get above 145 to call that a break. But you know, as we know, sterling can get some explosive moves, and you know, especially during this critical Brexit period, you know, all you need is one comment here, one comment there, and we can be off to the races in either direction. So you know, just keep that in mind, and you know, look out for some more volatility and potentially some wild moves ahead. But for today, definitely positive, and if they can get a Brexit deal done, one assumes the market will take it positively, and maybe some of these sterling downtrends, including sterling yen, will break going forward. But obviously, that's very much Brexit dependent. And with that thought, I shall leave you to it, and wish you all a good day ahead, and look forward to speaking with you tomorrow. Cheers.